Hello again, everyone. I'm attorney Robert Flusses. What are some of the ways to improve your credit and begin actually saving money after bankruptcy? There are many ways to do this, but the best way is to create a plan. Following the plan, though, is the hardest part. This video will serve as motivation for you. You may want to bookmark this video for future reference if you stray from your financial plan. Those of you who filed and received your bankruptcy discharge should think back to the 2 courses you were required to complete in order to receive your bankruptcy discharge. The pre- and post-filing courses were required by the Bankruptcy Code for a reason. They were designed to educate you as to, first, how you got yourself into financial problems, and second, how to avoid filing bankruptcy in the future. Start with this premise. 1. Your overwhelming debt has been cleared and you have a fresh start now. 2. The goal is to not make the same mistakes that you made in the past that pushed you into a bankruptcy. Now, I'll concede that some of you may have had serious health issues and faced mounting medical bills. That's a whole different story for a different video. Those of you who are unable to control your spending are the people that I'm speaking to in this video. Start by creating a budget and follow it religiously based upon your income and monthly expenses. A budget will keep you from spending on unnecessary items that violate your budget if you follow it. People that filed bankruptcy didn't have a budget and recklessly spent their paychecks and didn't even know where they spent it. After bankruptcy, it's easy to tell yourself that you're going to follow a budget, but actually making a budget and living by it is what needs to happen. That's the hardest part, forcing yourself to live within a budget. You have to prioritize and strictly control your spending. If you don't, you're going to put yourself right back where you were. Here are some of the important rules that should be followed to get yourself back on track. Rent or mortgage payments are a priority because obviously you need a place to live. But there's more to that. Renting a unit should be scrutinized for value received. Are you paying too much for rent? Can you find a smaller place that will fit your household size and offer amenities that you can live with, allowing you to make lower monthly rental payments? This same theory goes for homeowners. Purchasing a home that's more than you need is a mistake that many people make. It adds costs to your living expenses. A bigger home usually creates a bigger mortgage, higher utility bills, higher property taxes, and more maintenance costs. Think, do you really need a home this size? Can I get by with a more affordable home? You can't be impulsive when purchasing a home. You need to stick to your budget. Don't allow a mortgage lender or realtor talk you into buying a more expensive house just because you qualify for it. It doesn't benefit you. It only benefits the lender and realtor because they are operating under their interests, not yours. They get bigger commissions, and you're stuck with a big mortgage payment. Same theory goes for vehicles. Before filing bankruptcy, many people default on their auto loans because they purchased a vehicle that wasn't within their budget, and they purchased it without thinking about how is that payment going to fit into my budget. An expensive car isn't required to transport yourself from point A to point B and back to point A. You need a reliable vehicle, and good used cars can be found within your budget. You need to make a sacrifice. You should work your way to getting rid of the expensive vehicle with unreasonable payments and buy a used vehicle for cash. Use that vehicle for a few years until you get back on your feet. And be careful with auto dealers. They aren't looking out for your interest either. They're looking out for their own interest to move their vehicles off their lots. And if you finance the vehicle, they're going to charge you with the highest interest rate, using your just completed bankruptcy as an excuse to justify the higher rate. They're making money off you, and they could care less about your finances. You're stuck with a debt, and if you don't pay, they'll take the car back. You don't want to go there again. How about food? We all know that food is expensive. Find coupons and use them. Over the course of a year, you'll be surprised how much money you save on groceries. You could save hundreds each year. Cut back on going to restaurants too. Budget going out to dinner once in a while. Cut back on fast food. Not only is it unhealthy, but it's expensive if you do it all the time. Bring your own lunch to work instead of spending $8 to $10 each workday. Also, you don't have to shop at the same food store for everything. You might be able to find certain food staples at another store at a much better price. It's inconvenient to drive elsewhere, but in the long run, it's financially worth it. Auto insurance is very important and probably the biggest mistake most people make. I've had former clients call me months or even a year after they received their bankruptcy discharge complaining that they were in a car accident. My first question is, were you at fault? And they were. The insurance company for the person who was hit is demanding payment for the thousands of dollars to cover the money they paid out to their insured for damage. Why would you put yourself in that position by failing to insure yourself for at least liability? Some will respond that they can't afford insurance. I get that, but vehicle insurance must be part of the budgeting process. Use the savings on food, rent, mortgage to fund an insurance policy. After bankruptcy, if you get into an accident and it's your fault, you're not going to avoid paying for the damages that you caused to another. And speaking about insurance, you need to obtain some type of medical insurance to cover you for catastrophic illnesses to avoid accumulating massive medical debt should a health emergency occur. Retirement age should be a consideration. Everyone's going to get old, so you should start preparing for it now. If you're still relatively young, open and start funding a retirement account. If your employer offers a 401k, contribute the maximum amount. If you're self-employed or your employer doesn't offer any retirement plan, then open an account like an IRA or other safe investment that builds wealth for your retirement. Monitor your credit report. Make sure that there are not any entries that shouldn't be there. Pay your bills on time. Don't accumulate credit cards if you can't pay them off each month. Don't use credit cards to supplement your income. Make sure that any creditor judgments appearing on your record that were taken against you prior to the filing of your bankruptcy are removed. Many times, the judgment status should be changed to satisfied due to discharge in bankruptcy. You can go to the county courthouse where the judgment is docketed and ask the clerk for the paperwork to complete this task. It's worth it. Finally, you don't need to go to companies that tell you that they can fix your credit. You can do this by yourself. It's really not that hard. All of the things that are described here should be methodically done step by step. You don't have to do everything all at once. Make a timeline for tackling each step. Make a game plan and a budget. Be diligent. Respect the fact that correcting your credit and finances will take time. Follow it, and you'll be very happy that you did. I'm attorney Robert Flessis, and thanks for watching.